Okay, peeps, welcome back. So today we're going to talk about KLIP, dividend yield, price appreciation, diversification in holdings, rotation of capital, and why KLIP is a better deal to buy than some of the other current yield max funds. Let's get into it. So the first reason that you might want to consider buying KLIP is because of the dividend yield. The dividend yield as of current is 54, almost 55% currently. When we compare that to something like, say, Pepsi, for example, we'll pull up Pepsi. You get 2.86% for Pepsi, which is not a bad deal with the compounding effect over time, but it's pretty hard to beat 55% dividend yields. So, we all want that sweet, sweet, juicy passive income where we don't have to work and it just flows into our bank accounts, right? Who doesn't want that? So that's the first reason. The second reason you might want to consider picking up KLIP, again, not financial advice, is for price appreciation. If we go over here to the charts, you can see that KLIP is down pretty substantially from the highs from when this thing was released. It's down about 28%. So there is, if you want to inverse this, there is an upside potential here of 20 or 40%, not including price discovery. Again, this thing could go even higher and higher and higher. It's happened in the past with different companies like Tesla and NVIDIA are a good example of those. Now, if we go to the underlying holdings of KWeb, give me a second to actually find this thing. It's here somewhere. I have a long, long list of stocks that I watch. So here's KWeb. This is the underlying holding for KLIP, just in case you guys were wondering. So KWeb's been around for, it looks like, a very long time. This thing currently, from the bottom to the top, would have about a 250% increase. Now, again, KLIP is a covered call ETF, so you wouldn't get all of the upside, but you get a lot of upside, though. Let's just put it like that. It's better than zero, which is, that combined with a 55% yield is amazing, right? Who wouldn't love that? Now, if we take a look from the top down to where it currently is, it's down about 71%. So you have support here. You can see this whole kind of support zone going on for a really long time here. Massive upside potential, and it's already been beat down more than 70%. If we compare this to something, say, like, I'll use NVDY as an example, since that's the most recent one that's been sitting around the all-time highs. If we take a look at NVDY, this thing currently is roughly about 12-ish% from the highs. Not really sure if you could call this a green candle. I don't know if this is a green or a red candle. As you guys can see on the candles here, the green candles are hollow and the red ones are filled. But this is a green filled one, so I'm not really sure what's going on there. But you got about 12% upside here. And let's take a look at NVIDIA. So NVIDIA currently is sitting right around the all-time highs. It's only down from the all-time highs about 7.5%. Again, the reason for that being was because of the most recent earnings call. Earnings came out super bullish, had a crazy beat on earnings. As you guys can see here, it smashed expectations. So when we compare KLIP to NVIDY or KWeb to NVIDIA, there's a lot more upside potential, and the yield is just as high as NVIDY, if not higher. Okay, so that's reason number two. Reason number three is because KLIP has diversification, whereas NVIDY does not. NVIDY is based on one single company, which is NVIDIA. And again, I'm super bullish on NVIDIA and NVIDY, but diversification in your holdings is always key, right? Because if there's a major market downturn and the stock market dumps 50% in the next 12 months, which I'm not saying is going to happen, and you have all of your money in one position, well, I mean, there is, massive potential here to just absolutely get destroyed on your holdings. This thing is up 72 or whatever amount it is, but, from the current peak down to the previous low, you're taking a look at about 72%. So if you had 10,000 invested, you would only have about 2,800 if you chose not to sell. So diversification is key. Here's the current holdings of KLIP. You got Alibaba, Tencent. Not really sure what these two are. You have Baidu, NetEase, and JD.com for a few examples. You can go up here and see that this is actually the KWeb, which is the underlying holdings of the KLIP covered call ETF strategy. Now, as for KLIP itself, if we go down here to the distributions, you guys can see the distribution calendar. I showed you something similar on the YieldMax website. So this shows the distribution dates, record payable, and the amount pretty much all ahead of time with the exception of the amount. So the next ex-dividend date for this thing would be on the 29th, which according to this calendar, you would have basically one full trading session to buy shares of these before the ex-dividend date. I'm not suggesting you buy. You can do what you want with your own money. Not financial advice. I'm not an advisor. But I just wanted to show you guys this so you can see where the next X dates are for throughout the end of 2023 and also the payment dates. So the third reason would be diversification, right? So the fourth reason we have is rotation of capital or rotation of dividends. So I'm going to show you guys what I'm talking about here. This is not really a new concept for me. I've known about this for a while, but a lot of other people are talking about it now. So I'm going to go ahead and bring it up. And that is basically rotating your dividends in and out of different positions. So here's what I mean. So if we take a look at KLIP on the NASDAQ.com and you're taking a look at the payout dates, well, actually, hold on a sec. I guess this would be better illustrated in the front month or the forward months. So the X date here is on the 29th. We get paid from KLIP on August 31st, right? So if I scroll all the way down here to the YieldMax Options ETF website, this is the way that I got to the calendar last time. Just click on Tesla on the website, hit the click here button, and then it'll show you basically all the front months for the payment dates. So let me go ahead and move this over here in between KWeb and KLIP. So on August 31st, that would be the next payment date for KLIP, right? Here's the idea. Basically, I would be taking the KLIP dividends that I get paid on August 31st or September 1st, and I would roll them into one of the YieldMax funds before the ex-dividend date for the YieldMax funds. So I'd get paid on the first from KLIP, move the money into YieldMax on basically September 7th or sooner, and then get paid out from YieldMax on the 18th of September. And see, 18th of September, and the ex-dividend date for KLIP in September would be on the 27th. So basically move the funds from YieldMax on the 18th into KLIP before the 27th, and just so on and so on. And you can do this with any dividend paying stocks. It doesn't necessarily have to be these two, but obviously if you're looking for maximum yield here, this would be the way to go. So this is the fourth reason, rotation of capital or rotation of dividends, which also not only would you get paid more times in a month, but your money would compound much faster doing it this way than if you just simply reinvested whatever it is you're getting paid out from back into that specific holding. Now, the fifth reason is because KLIP is cheaper than some of the current YieldMax funds. So let's take a look at the price of KLIP versus, we'll say NVDY, and we'll use NVDY and APLY as current examples since they are currently paying yields and some of these other ones are not just yet. So KLIP currently is at $18.22 a share. Okay. So the all-time local high for KLIP was at $24.82. This thing is down pretty substantially. If I could actually get this thing to work, that'd be nice. So again, this thing is down about 28%. APLY is $2 a share more expensive. NVIDIA is $5 a share more expensive. APLY yields less than KLIP does, but APLY is also considered to be a safer investment because it's based on Apple, and Apple is a very safe big tech company. APLY has actually been beat down pretty significantly as well, so I suppose this would be a great position to pick up. But again, it's only down 11%. KLIP currently is down a whopping 27%. So in terms of upside potential, KLIP is a better deal in that aspect. And NVIDIA is currently sitting roughly around all-time highs. Looks like it had a small pullback after the earnings of about 3.5%. And it's also more expensive in terms of share price than KLIP. KLIP's most recent payouts have been more consistent. As you guys can see here, you got like a dollar, 86 cents, 86 cents. And if I scroll over to NVIDIA here on the NASDAQ, you get 81 cents, 95 cents, 74 cents. So it's kind of a little bit more all over the place. So that's the fifth reason, is that it's less expensive. There's more upside and the income's just as high, if not higher. And you get a bigger share count for the same amount of money with KLIP versus some other holdings like NVIDY and APLY. Now, if we go over to the compound interest calculator, I'm going to run through some quick numbers for you guys because I did receive a comment about the whole compound growth over time thing. So I'm going to run a quick sketch for you guys here. If you put $1,000 initially into KLIP and just invested $100 a month for 1 year at the current interest rate, assuming that rate was the same for an entire year, your investment would be up to $3,261. Now, if we go ahead and roll that out for 3 years and the metrics are still the same, you'd have $13,729. Well, let's think about this for a sec. If you're putting in $100 a month and your initial investment is $1,000, that's $3,600 plus $1,000, so that's $4,600. So you've actually, in just 3 years, you've grown your initial investment by $9,000 just by reinvesting and buying the same amount every month. Now, if we scroll this out to 5 years, it goes up even more. It gets even more crazy. So now you're at $44,300. If we go out 10 years, sitting at $675,377. And we'll just be extreme with this, and we'll say we go out 30 years. So this is all you ever intend to hold until retirement. I'm not suggesting this. I myself would never do this, but just for the sake of talking about compounding interest, in 30 years, you would have, oh my God, you would have $30 billion in your initial investment from the capital that you bought initially. And as you guys can see, at around year 23, 24, this thing just goes AWOL, dude. I mean, look at this thing. It's like a rocket ship. It's like a Tesla ship just going straight into space. I don't know that it's going to be paying out this high for the next 30 years, but you never know. I mean, worst case scenario, you put a small amount in your portfolio, a very small amount, like let's say 1% of your portfolio is in KLIP. It will still give you a nice income boost every month, right? So anyways, hope you guys enjoyed this video. Please like, comment, and subscribe, and I will see y'all later. Peace.